Here's the truth that most people never learn. The US tax code wasn't written to punish people, it was written to influence behavior. And one of the clearest messages it sends is this: start a business. If you're a small business owner or thinking about becoming one, you need to know this because the way you earn income directly affects how much of it you get to keep. Think about it. The government uses the tax code to reward actions that benefit the economy. Want people to buy homes? Offer a mortgage interest deduction. Want people to save for retirement? Give tax breaks for IRAs and 401ks. And when it comes to business ownership, the tax code rolls out the red carpet. That's because business owners create jobs and drive economic growth. So instead of penalizing them, the government incentivizes them with legal strategic tax advantages. And these incentives are not just for Fortune 500 CEOs. They're for real estate agents, consultants, hairstylists, online sellers, graphic design artists, even people with side hustles. Let's look at the key differences between how employees are taxed and how business owners are taxed. If you're an employee, the IRS takes its cut before you even see the money you've earned. It does this by withholding Social Security, Medicare, and federal income taxes. That means you're taxed on your gross income and then you live on what's left. But when you're a business owner, it flips. You earn income, you pay for business expenses like supplies, software, marketing, training, and travel. And only then are you taxed on your net profit, not on your total revenue. It's not a loophole, it's just how the system is designed to work. Section 162 of the tax code allows business owners to deduct any ordinary and necessary business expense, and this is before calculating their taxable income. Some examples of these expenses that can be deducted are home office, meals, equipment and supplies, even wages paid to your kids if they work in your business. And that's just to name a few. You don't have to be full time or make 6 and 7 figure profits in your business, but you do need to have a legitimate business. That means you're providing a product or service with the intent to make a profit. If you occasionally sell something online or cut hair for a few people each month, that can qualify as long as you treat it like a business. The IRS calls this the profit motive. If you're just doing something for fun or as a hobby, then the deductions won't apply and you'll still need to claim any income that that hobby produced. But if you show up like a business owner, keeping records, tracking expenses, and separating personal and business finances, you can start tapping into the same tools the big players use. What's more, business ownership doesn't just offer deductions, it opens the door to more strategic financial planning. For instance, you could open a solo 401k or a SEP IRA through your business and contribute much more than the average employee can to their retirement. You can time your income and expenses to lower your tax liability. You could elect to be taxed as an S corporation and reduce your self employment taxes by splitting your income into salary and distributions, or you could use an accountable plan to reimburse yourself tax free for out of pocket business expenses. These are tools that employees simply don't have access to. So, how can you start using the tax code to your advantage? First, start a legitimate business. If you've been thinking about freelancing, starting a service, or launching a product, go for it. Just make sure you operate with the intent to make a profit. Then open a separate business bank account. Mixing business and personal funds can cause headaches and get you in huge trouble with the IRS. So avoid that by always keeping your business and personal funds separate. Next, track every expense. Use software, apps, or even a spreadsheet. But if it's related to your business and it's ordinary and necessary for you to make a profit, you need to track it to be able to deduct it. And finally, work with a tax professional. And I don't mean just someone who prepares your taxes at the end of the year. Work with someone who understands tax strategy for your business and can help you keep more of what you earn. Again, the bottom line is the tax code favors business owners. So if you're running a small business or thinking about starting one and you want to make sure you're not leaving any money on the table, Click the link beneath this video to schedule a call with me. I'll help you build a tax strategy that protects your profits and supports your growth. This is Tasha with West Financial Services, LLC. Like, subscribe, and follow us for more tax strategies and education for individuals and small businesses.